Picture the classic ideal of financial stability. You clock into a secure corporate job, earn a predictable paycheck, and responsibly deposit your savings into a standard bank account. But according to billionaire investor Ray Dalio, holding your wealth in cash is mathematically the worst long-term investment strategy you can choose. This chart shows the hidden cost of safety. At an average inflation rate of 3.5%, your cash doesn't just sit there. The actual purchasing power of your money steadily drops over a 10-year timeline, acting as a silent tax on savings. And as former CFTC Chairman Chris Giancarlo points out, the traditional banking system comes with another string attached. Under the Bank Secrecy Act, leaving your money in legacy institutions subjects your daily financial transactions to continuous government surveillance. The legacy banking system offers zero long-term wealth preservation and strips away your privacy. Playing by the old rules actively penalizes you. The entire financial system is standing on a massive credit bubble. When these burst, markets suffer severe corrections, wiping out 60% of asset values. To manage this, governments print money. The second line shows the direct result. Your fiat currency's purchasing power drops concurrently. This economic fragility is colliding directly with a technological wave designed to replace traditional white-collar labor. Holding cash while working a standard, replaceable job puts the average middle-class worker on a direct collision course with a system-wide economic reset. To understand where your job is heading, Dalio points to the evolutionary history of labor. In the agricultural era, heavy physical tasks performed by humans and animals were eventually replaced by early mechanization. The Industrial Revolution accelerated this displacement. The factory floor automated physical repetition entirely, replacing manual assembly line workers with vast, efficient machines. Today, automation is ascending into human cognition. Artificial intelligence is taking over high-level, abstract reasoning, processing complex datasets, and executing white-collar tasks in real time. The immediate result is a massive wealth gap. Business owners and capitalists capture all the revenue from these efficiency gains, while the employees replaced by the software lose their income. If your primary asset is performing a cognitive task that a machine can learn, your future economic output is rapidly approaching zero. As AI disrupts labor, digital assets are disrupting finance. This internet of value dissolves a massive centralized banking hub into a distributed web of peer-to-peer nodes, decentralizing money like the internet decentralized information. Prediction markets crowdsource forecasts from tens of thousands of participants with money on the line, bypassing traditional, centralized betting monopolies entirely. Legacy institutions are fiercely resisting this change. Politicians in Washington are utilizing regulatory bottlenecks to block these networks and maintain centralized control over capital. We are watching the exact same turf war play out that we saw a decade ago when local taxi commissions attempted to legislate ride-sharing platforms out of existence. Consumers gravitate toward the more efficient system. Decentralized finance is an unstoppable network force that will evolve and bypass gatekeepers, regardless of Washington's permission. Surviving this reset requires immediate action. Dalio advises aggressively upskilling to reach the top 10% of your field. You have to understand AI and use it to become a capitalist with ideas, rather than a replaceable worker. Next, you must diversify your wealth out of cash. Real estate, for example, functions as a forced savings mechanism while offering long-term tax advantages that traditional savings accounts lack. Beyond property, you need a defensive shield made of hard money. These are assets like physical gold or Bitcoin that governments cannot easily confiscate or arbitrarily print into worthlessness. This pie chart illustrates a model asset allocation for this new economy. Notice the specific 5 to 15% slice dedicated strictly to hard money, creating a permanent hedge against fiat debasement. True financial security requires deliberately detaching a portion of your wealth from government-controlled fiat and insulating your income from easily automated labor. Giancarlo warns that waiting for regulatory clarity or hoping the traditional banking system will self-correct guarantees you will be left behind. Adapting to this economy requires fearless, proactive movement through a rapidly shifting technological landscape. When the structure of the economy completely rewires itself, Adhering to the legacy rules of cash savings and standard labor is the single highest risk you can take.